So we know that ideas always travel fast, and more than that, the cultural aspect of everyone building across borders that shapes not just your identity or ideation, but broadens your horizon about how you actually see yourself and transform into a global citizen. And to make that global citizenship become a true reality today, we are joined by the wonderful Linda Du. She's been the founder and CEO of Moola Money, which is a UK based startup, and it's helping millennials work with financial clarity, psycho behavioral insights, goal setting, and also she's been running Okta Investment, which is a Berlin based, I'd say a family focused business. She's been in so many countries. I mean, as you mentioned, from South Africa to the States to Middle East, and now you are at the intersection of finance, culture, and tech. I would love to deep dive with the marketing access to financial education and so many different aspects that we have talked about. It's such a pleasure to have you with us today, Linda. I'm so excited to learn more about all the things that you've been doing and such a global experience that you have brought over here with us today.
Thank you for having me.
And to actually start with, I mean, what got you into fintech at the first sight? I mean, why, and specifically why millennials?
Yeah. Yeah, so I think the my first exposure to the field of finance was actually quite an unusual one. So I was doing, between my first and second year of my MBA, I was on this program at Yale called Silver Scholars. So I started my MBA very early. I was actually only 22 when I started, which is quite uncommon. So between my first and second MBA years, I actually took some time out to do some work. And one of those things that I did was a fellowship with Kiva in Southern Africa. And so Kiva is a microfinance, it's a peer to peer lending platform. And so what they do is, because the very last mile of microfinance distribution is very cash based. And so they do that distribution through partner networks. And those partners are microfinance institutions, educational technology companies as well. And so what happens is that they basically ask fellows to come in for a 6 month period to support those partners with their operations, to check the validity of the loans, and to basically support in the monitoring and reporting of these partners. And so I had a pretty interesting portfolio. I was based in South Africa, so my previous job had been with Ericsson in Southern Africa at the time. And I was in South Africa, and I basically worked with non-traditional finance partners. So both, I had one finance partner that was just a pure microfinance institution, but then I also worked with a fintech company as well as an educational technology company. And so I would go around and look at their credit operations in South Africa, Zambia, and Malawi. And something that I found really inspiring there was about how a lot of these microfinance institutions, so firstly, they get a bad rep because they have really high interest rates. But when you look at the local landscape, banks aren't willing to give loans to micro entrepreneurs. So to many micro entrepreneurs, so the types of people that would be selling fritters on the side of the road or having their own kiosks, they don't have any other access to finance. And so the loans that these institutions provide enable them to empower themselves. And so that really shaped the way that I thought about finance, because finance is not, people think of glamour and wealth, etc., but I think of finance as actually a utility and a basic human right in some sense, that it gives people the tools, and it is just a tool that people can use to empower themselves in their own businesses. So that shaped my entry into the world of finance. I later finished my MBA off at Yale, and then I worked at McKinsey, where I was in the retail banking practice. So I led strategy and risk projects in Europe, the Middle East, and Africa. And really, I was in a lot of different geographies. And so what was interesting there was that I had this consistency view of retail banking, looking at banking products that interfaced with individual customers. So there was very much a human centered element around it. I was looking at these different cultures. So some of my big clients were in Denmark, Nigeria, and Egypt. So very diverse geographies. And so I was really able to see the impact of culture on how people make financial decisions, what type of financial instruments are available in each country. And eventually, that led me to create my own investment company where we run a lot of alternative investments. So we've actually been awarded for 2025, the best alternative investor in Germany, with
Wow.
a special mention for excellence in cryptocurrencies and AI. And then because, the hard part is actually getting the strategy and the fundraising done for an investment company. Once that's done, I've actually just hired someone in from India who's joining me in Berlin to manage that. And so, because I ended up with more free time on my hands, I actually started Moola Money. And
Oh,
so,
wow.
Moola Money really came out of a place of need that I was witnessing in my friends. And so, what happened was when I was setting up my investment company, and I was able to do the investment company really quickly because I have done retail investing for over a decade now. So, I've been managing my own assets, which were things like, crypto and ETFs. At McKinsey, it wasn't actually super convenient to do single company stocks because there's a lot of rules to prevent insider trading. But then
Right.
at the start of last year, when I left, I was able to do the single stock trading. And so became very good at that. And my friends basically started asking me, how do we invest? And so I basically saw two types of user needs. And so, to generalize the types of needs that these were coming from, so what I found interesting was for my personal financial consulting work, the people who were approaching me there were very highly educated, usually actually worked in the fields of business and finance. Some of them even were professional investors, but just didn't have the time or energy to focus that on themselves. And so they were looking at modeling their personal finances, getting that transparency over their household income, their assets, their debts, things like mortgages, and creating a broad picture. And they knew that I'd been doing this for some other people. And so they were coming to me, and that was a nice paid side hustle as I was setting up my investment company structure. And so I had this G sheet that I used. And once you start doing, let's say, 5 to 7 models, then the G sheet becomes pretty standardized. Once you go beyond that, very little changes now. It's like, if I go to different countries, the main thing that changes is if there's special types of products that are available in some countries and not others, also taxes. But then I realized that I could automate this for scale. And then the other type of friends that I had were people who had no clue about finances. So I live in Berlin where there's a lot of freelancers, a lot of creatives. And so they were basically saying, like, I don't know how to invest. People are telling me I should.
Right.
So I just invented this boot camp that I ran for a couple of different communities that I knew. And so then I basically just saw this need for transparency in education. So, education over some of these concepts, as well as the transparency over someone's personal finances.
Right.
And I saw the opportunity to scale this through automating, through code, through AI augmentation as well. And so that led me to start building Moola Money, where we're basically automating this journey end to end and then augmenting at the end. So, we'll do a big diagnostic, what we call a financial health check, to show you what do your finances look like? How does that carry on into the future? As well as what are some of the actions you can take? What concretely do you need to meet your goals? And then we'll have the option to either go to a GPT financial advisor or a human financial advisor, because some people, especially for these big decisions like buying a house, still want to talk to a human at the end of the day. So
Yeah.
that's kind of where the idea came from and how it's developing.
I really love how you were so holistic with from like point A to point B, and it was so clear that you started from this area, and this is how you dwelled into these places. I would also love to like understand in detail, as you mentioned, you were raised in between London and Beijing. Like there are like two different parts of the world, like the United Kingdom and China. Like one is in Asia, or like a very Asian culture, and the other is like completely dwelled into the Western side of it. What did you feel while being in two different parts of the world, and specifically when it comes to China being the upcoming superpower as well? So do you think that the mix, or like I'd say the understanding of both of these economies, politics, the social setting, influenced how you ideated on the ecosystem of your business?
Yeah. So I think for me as a business owner and operator, I think a key part of my journey has been my upbringing and my upbringing. So I started out life in the UK. We then moved to China when I was young, but then I moved back to the UK on my own to complete my education. And I think something that was really a source of cultural learning was basically seeing my parents go through the process and going through these different systems. So my parents were young when the Cultural Revolution happened in China, so that was
Right.
kind of a great equalizer. They grew up in a time of massive challenge and scarcity, and in a context that was, very anti-business, anti-capitalist. And so while they were started their careers in China, so my dad actually started his career in the military. He was a mechanical engineer, basically repairing trucks. My mum was actually in university near the end of the Cultural Revolution. So she was actually able to go to university. My dad, universities were actually closed when he was in his early 20s. So he had to kind of like learn he had to basically learn from scratch again. He had to complete his high school entrance exams, apply from universities. And so he had um, this massive lag behind everyone else because of these external factors. And then together they then kind of started their careers in China. But then once China opened and there were these opportunities to go abroad, they both moved to the UK. But again, they had to start from scratch. They didn't have the language skills, so they had to learn English. My dad had a job, but then my mum had to actually, they had me, so she had to actually support the family by waiting on tables, even though she'd had a job at HP in China. So again, it was like the story of reinvention, where they had to then learn not only the language, but the additional technical skills. So my mom eventually did a master's degree in software engineering to complement her bachelor's from China in the UK. And then they basically climbed their way up in white collar jobs. And so I saw them go through this process. And because there was a lot of stuff that we just didn't know, all these cultural references in the UK that we just had to learn. So we had to kind of learn, like, what is who is the prime minister of the UK, even who are all these politicians, like who are these businesses, what do they do, and how does everything fit together? Which sounds kind of silly nowadays because when you grow up with it, it's not something that you think about. But when you are new to the world of white collar, like we kind of had to like study it like a book. And then after that, so when I was about 7, my mum had by that time climbed up to the top of the ranks in her company where she was doing
Right.
SaaS engineering, and she was appointed general manager of the new China office. So we actually moved back to China for her job. My dad actually quit his job, and again, he was kind of being held back up again in his job. My mum's a better language learner of English, so his English like never quite reached the fluency that hers did, and mine obviously did because I grew up in the UK. And so he's been held back from a lot of promotions because of that language barrier. And
Right.
so he ended up quitting his job and going through entrepreneurship. My mum's job in China was, in it was very professional, very high level. But then she also started doing property investments in China in the 90s. And so
Wow.
for anyone who was around in that time, you kind of know that China in the 90s was great for property investments. It was also great for entrepreneurship. So when my dad started his new company in equipment manufacturing. So he was doing hardware equipment manufacturing, and my mum was doing her investments. The decade after that was kind of when we actually shot up from being lower middle class slash middle class to really, different level of social level. And to basically, for me, to have seen that level of social mobility in one family in my lifetime before the time I even hit 20 was probably the biggest learning lesson that I've had. I have a friend who's a sociologist, and I didn't know that it was called cultural capital, but then that's probably
Yeah.
like the biggest component of cultural capital that I saw, which is that white collar jobs and corporate jobs are great for getting stability, for being in a new country, for, climbing up certain ladders, and for providing a certain sense of security. But what I also saw was that they can eventually hold you back if you are able to take risks And if you are able to build your own organizations around you to build the kind of work that you need to support you. And so that was what, and so the way that they did it as well was through investment and through entrepreneurship. And so I also, based on that model, so went into retail investing. And I think something that I'm grateful now as well is that in, in the past decade, investing has become so much more accessible to normal people. There are loads of really good financial products out there, and actually, many European governments have great tax relief schemes with more complex financial products like self invested pensions in the UK, Roth IRAs, or cash and ISAs in the UK. And so, actually, by kind of learning about these different tools that you can use, maxing them out, people are able to quit the 9 to 5 much earlier than they were before. There's a whole movement on Reddit that I really love following called FIRE, which stands for Financially Independent Retire Early. I
Oh,
I wouldn't say many friends, but I know of a couple of people who are have been able to quit their day jobs because of strategic investments that they've made, either in safe things like ETFs, index funds, S&P 500, or risky things like cryptocurrency. And so I have multiple friends who are able to retire in their early 30s and basically focus on projects that they find inspiring and interesting. And I would also say that crypto has been a big factor behind that. So again, I think that's kind of what shaped my journey into the world of finance and fintech specifically, is also just wanting to show other people that it can be done. I speak to countless people who say on a daily basis that they hate their jobs. And
oh
so it
yeah,
can be done, that you can
absolutely.
quit your day to day and just work on projects that you find inspiring and important.
But eventually, like when you're working, for example, if you ask me when I started out, like I say, everyone starts your journey out as an intern long back. So initially, you do know that you're trading your time, and for a very long time, you know that you're going to trade your time. So when you talk about investments and finance on cryptocurrency, and since you're an expert at all of it, and you've been like into retail investing, you've been into it for like more than a decade now. What if you had to like give me a roadmap for someone who's like in their mid 20s, or let's say like, yeah, mid 20s, and they want to retire, let's say by early 30s? What How does the roadmap look like? Like how much should I be, or that person should be making, and what areas should they be investing in? And in these areas, does the country of origin has a very specific role to play, or if you're playing in the international markets, it's easy?
Yeah, yeah. So there's no one size fits all answer because everyone has different goals. So
Yeah.
at Moola Money, the one of the first things we ask you about is what are your goals? Because also taking into account that if you want, for example, most people want to buy a house at some point, you will need a down deposit. And so if you need to reserve part of your income for your down deposit, that's a different profile from someone who is fine and happy to rent forever for different reasons, which I won't go into too much now. In many cases, actually, it's making less and less financial sense to buy a house. And so actually, if you do decide to rent for perpetuity, or at least for the 10 years until you build enough assets to buy a house, that might actually be the more sensible thing to do. However, most people do like having a sense of security. And so there's a concept in economics called utility, which is, and the idea there is that there's part of a financial decision that is there to give you happiness and joy, which cannot be explained by finance alone. So often when it comes to buying a house, especially in developed economies, utility becomes like a really important factor because it's like, oh, you might like a certain postcode, or you might want to be have a house that has like a beachfront plot, or something else, and that measure of the individual happiness that you get from something, or a sense of security that you get from something, is utility. And so there's all these different factors where it's like, we've done our best with economics to explain human decision making as best as we can through certain concepts, but there's still a lot of human nature that can't be described that way. In terms of what's best, that definitely depends not on country of origin, but more on country of tax residence. Reason being that tax has I think tax is probably like if you are in salaried employment, tax is probably the biggest drain on that salaried employment, but there are ways, and the ways to optimize it and to get the most relief from it are unique to each country, because countries or jurisdictions are the ones setting those rules. And so, if I give you the main example that we found counterintuitive in the UK, and so also one thing that's interesting to keep in mind is that I started Moola Money in the UK, but I've never actually been tax resident in the UK because I've never had a job in the UK, right? I left as soon as I finished
Ah.
university. So I actually had to relearn the UK tax law. And so the common knowledge that you find in the media, and the media is, English speaking media at least, is mostly US based, is that the
Right.
best thing you can do is to max out your Roth IRA and to basically take as much risk as possible the younger you are, as well as diversifying your investments. Which I think if we didn't have any taxes, that would also be the most sensible thing for you to do. Invest as much as you can, as as diversified and high risk as possible the younger you are, reducing the risk as you near the end of your life. However, what we do find is in the UK, because HMRC is the tax authority in the UK, they have a really generous scheme for pensions. So in private pensions, whatever you and your employer contribute, so firstly, like your employer will often do a matching scheme if you are salaried. And then whatever you and your employer contribute, the HMRC will actually apply a 20% tax relief on top of that to a private pension, which is massive because you get both the 20%, but you also get the impacts of the annual compounding. So when we're doing people's long-term financial modeling with any spare income that they have, we usually try and use that to max out that private pension contribution if they are able to do so. And then after that, we then recommend the investments, etc. However, there's
Okay.
another part of this story that isn't captured by the pensions and the investments, which is the self-direction and the accountability. So often when you invest through a pension fund, you're a bit limited. And so pension funds are run as they're run usually by a person. So that person is called a general partner, and that person will choose how to invest your assets. And actually, a pension fund, and that's done for simplicity because, most people don't want to think about where their money's going. They just want the sense of security, and they just don't need to think about anything beyond what are some returns. I'll go for some high risk, like maybe I'm sustainable, I have certain ethics, and I don't feel comfortable investing in certain asset classes. So the what I see as a disadvantage of pension funds is I have a super high risk profile. I like to educate myself. I want to make my own investments. And so a pension fund might return something that's close to a world global index benchmark of around 7%, which is better than inflation, pretty decent, but it's not high enough for me. So what I might then look into is a self-invested pension plan, which exists in the UK, but in many places it might not exist, where I can actually choose some of my own investments in the long run. Another thing about pension plans is that they're very illiquid. Liquidity meaning like how quickly can I take this out as cash to apply to a purchase. So in many countries, you can't actually pull from your pension at all until you're 65, 67. And so then again, you end up being trapped. So then investments end up being better because they're liquid. You can get higher returns from them if you have higher risk and are willing to inform yourself. However, it can be quite a painful process to learn. And there is a lot of financial jargon as well. So I think if I were to give it, the only advice I would give at this point to someone not knowing their context is basically to start reading up on investing, personal finance, and if it is interesting, then experimenting with different product types, figuring out what they like and what they don't like.
Wow, that's quite comprehensive to understand this because it's so huge. I mean, you have industries out there, and since you've worked in McKinsey and like all these consulting companies, investment banking, you have like all these firms hedging. There are so many different things, bonds, and like I still remember when I was like trying to work my in a semester as finance as my major, and I was like, okay, so you have this, you have this, you have this, you have this, and then you have like 30 other topics, and I'm like, this is so overwhelming. And chunking these different areas got so difficult. Initially, I mean, I would absolutely say it got to me like, I don't think it's going to work out. Is because, again, like, different numbers and then things you're out in there. Since you also talked about like scaling ideas, which is like from like teaching someone the investing basics to like a certain level wherein they feel that they're financially literate, and then to fintech innovation, which you're talking at Moola Money. So how does that journey look like? I mean, like, what are investing basics? If you had to, like, since you talked about grassroots education and investing, what are the investment basics? Like, what are the terms that I should know, which would just help me understand it better, and I won't feel that it's overwhelming, and I just leave that blog, book, whatever in the middle of it.
Yeah, yeah. So maybe I'll just structure my answer the exact way that I've structured the investing workshop, because I do run that for basically zero, starting from zero. And so the first part is there are certain economic concepts which are important to understand, and they form the foundation of investing. And so the first one is the magic of compounding. So the idea that if you are investing things, you multiply. So, say I have an investment and that increases by 10% each year. You have a starting amount, but then it's not that you add up that 10%. So, say I have 100, it's not that I add 10 to that every year. You're actually multiplying on the previous year. And so that ends up, so instead of having like a simple line chart that goes up, you end up with a curve. And that, I think that one thing is the reason why everyone should consider investing, pensions, etc., is compound interest. And it's also really nice because often when we're doing people's financial modeling and we explain that power curve to them, that many people who are kind of on, mid-level salaries at the moment are able to reach millionaire status in the matter of decades through that magic. The second one is risk equals reward. And so typically the higher risk that you're willing to take, the higher the amount of reward that you're able to get as well, as long as you don't sell when you're down. A third one would be diversification. So even if you are taking high risk, even if you decide you want to go into crypto, pick different types of crypto. Take the Dogecoin and the Bitcoin as well as the Pepe the Frog, rather than just doing Pepe the Frog. And what else are there? There are some hard and fast rules. Dollar cost averaging is another great one. So basically setting up automations so that you're investing on a regular basis and you can take care of price dips, so that when the market dips, you are able to buy things at a lower cost, and you also reduce the emotional decision making that you get there. So I think there's one section that is the hard and fast rules that are just based on pure economics. Then the second part that I usually do is how to come up with your investment strategy. So what are your goals that you want to achieve? What are your cash flow requirements as well? It's actually and so many people actually like the idea of retiring at the age of 40. And it's like, okay, so, well, if you do retire at the age of 40, you will probably need some regular income from your investments. And
Correct.
so things that provide regular income are things like bonds. But then if you are fine to actually say, okay, I'm fine to be salaried for a bit longer, but then I want to still retire, let's say in my mid 50s rather than my 40s. So how do I do that?
Right, right,
And so
right.
then you're optimizing for net wealth. So how do you basically set your financial goals? And that was a really interesting thing that we found when we were developing Moola Money, is that most people didn't know what their financial goals were, or didn't have financial goals and didn't know how to set them. So we've actually created a GPT assisted goal setter to help walk people through their goals and to go through that journey with them. And so, and so that's something you can try out already if you log into our website. And
Wow.
so then once you've done that, how do you then match these things together? So your own risk profile, your goals and liquidity needs or cash needs throughout the years, um, uh, combined with your current financial situation, like what are the changes that you need to do? And so we've taught people how to do that, but actually with Moola Money, we're actually solving for that. So that all that process will be automated. And then, yeah, the last thing is around implementation. So how do you actually go about doing this? And that's another area that we've identified where there's like a lot of kind of noise out there. And so it's like, okay, so say you want to do a pension plan, like how do you actually pick a pension plan that you want to do? How do you then kind of like make sure that it works for you? There's like a lot of marketplace options, and so something that we'd love to get to in the end. So I think that'll be a couple of years from now is to actually maybe include a marketplace model. So it's like, yes, we're recommending that you get a high yield savings account because actually you're super risk averse, you have some liquidity needs in the future, so like you don't really want to invest and potentially make a loss. So what are the high yield savings accounts that you can get? Brokerage platforms as well. What are the different types of platforms? What are the differences in how you use them? So everything from robo advisory, which is great for starters, to professional level algorithmic trading, which is more like interactive broker style. So yeah, so that's kind of how we run through the flow. And then we also added a chapter on alternative assets and crypto, just because those topics have been really hot recently.
I mean, I love how you've broken down and made it quite simple. Like these are the three topics, and this is how you achieve that kind of understanding towards it. And also, like since you've been to Yale and you've lived, I mean, a good amount of time in states as well, and you keep on traveling to states, there is a concept where people say that for you to like have a certain income coming in, the best option is not to like build a business but buy a business and sell a business, and that's like the best business to get in when you're buying businesses and you're selling businesses. So is it just jargon out there, but when it like, okay, do this and it's like doable, or it is something that you can actually do with a certain amount, or you need to be like a millionaire, or you need to be like super rich if you have to buy or sell a business? And is it actually that crazy model to financial freedom or not?
Yeah, so I'm kind of in two parts about buying a business, and I think their motivation really matters. And I think at the end of the day, you need to. So firstly, I would say that I think qualifications and experience are overrated. I think that's especially true in today's world when business in general is super volatile. And I think some of the core skills of like doing a business, which are, being scrappy, coming up with quick solutions, fast problem solving. Like if you have things like that, they can be applied to pretty much any business that you either found or buy. And looking for continuous optimizations. I think industry level knowledge, nah, it depends on the industry, right? So I actually there's certain industries where I think that like really matters are counterintuitive. So for example, I think like actually like me and my friend once looked into starting a restaurant. And then when we looked into it, we are like, this is actually something where you just really, really need the experience, you need the network, you need the connections. And so I think like doing hospitality in the restaurant business, that's something where like you actually do need the experience. Something like investments, I don't think you need experience at all. People will often say, oh, but you did McKinsey, you did retail banking. I think that's totally irrelevant. Every type of finance is so completely different. So like I later with Ultra Investment went into private equity investing, and like the stuff that I knew from McKinsey and even my personal finance investing was completely irrelevant. There was all this other jargon that I had to learn from scratch. And there were all these like rules and ways that people do business that I had to learn from scratch. And the beauty of actually coming in as an outsider into private equity is that like jargon is not that hard to learn. It's like learning a new language. You just like put it through ChatGPT nowadays, and like anything you don't understand, you resolve with ChatGPT. It's like, net asset value, IRRs, MOICs, all that stuff. Like you just learn it and it's fine. What is interesting is that like you can come into everything with a critical eye and question like, why are people doing this way? And so something that I've done that's like very counterintuitive with my investment firm is that I've basically structured each one. So usually funds will focus on a specific asset class. So private equity companies will usually, even then, they focus on a specific type of company. So you might do a scale where like, there's a company that's kind of like mid-size, mid-level, and then a private equity company will come in, give it some cash to scale its operations, grow in new markets, etc. You have buyouts where you buy out a company and then take over the management. Um, Mine was actually like totally generalist, and my main one was my main thing that I was optimizing for. So I had two things that I was optimizing for. One was purpose, and when you start to deploy capital, I think after a certain point you realize that okay, like anything you do is measured against S&P 500 benchmark. So like the easiest thing you could do is just throw everything into S&P 500 or any other index fund and just leave it there. And so if you are expending extra effort, you need to know why you're doing it. And so the reason why I'm doing it, and my emerging markets portfolio is a good example of this, because I underperformed the S&P 500, and I don't really care because I'm doing that because I actually like emerging markets. I find the projects really interesting, and it's something that I want to support. With the renewables and green tech, I actually set that up expecting to underperform the S&P 500, but I actually brought in a fantastic associate who I'd worked with at McKinsey called Roman, who did such a good job of structuring that portfolio that it now overperforms. That was actually kind of a consequence. We actually were optimizing for funds that we thought seemed nice, and we're doing projects that we thought were interesting. Some of them, some of the direct investments that we made were in battery recycling companies, battery technology companies. And so I think, that being the number one thing, saying, okay, we need to have a really good purpose and we need to be really clear on why we're doing this, even if that means underperforming certain benchmarks was important. Second one is, at the end of the day, if you are going into asset management, you are a money manager.
Yeah.
So, like, I mean, I have pretty low benchmarks for the investment companies, which is like basically just beat inflation. But then I think, to be fair, actually, the benchmark that I do want to go over is 10% IRR. So historically, the S&P 500 has performed at 10%. Some years, the past few years, it's been insanely high. So it's been more like 20 to 25%. And some years it will underperform that. But I think 10% as an average is totally fine. Yeah, so but I would see that as a second rather than a first, which is why I do make the case that I think that is impact investing, even though like a lot of the types of industries that we invest in are not per se, pure green or pure ethical companies. I do think that when you put purpose before the profit, then and make a case for it, then that is impact investing. Yeah. So.
So it's more like case based as well. It's not just, like understanding the industry, understanding different portfolios. And once you have a basic understanding of all these different areas, that's when you choose to make a move. And, like out there, you have hedging as a concept, you have entire, different markets. You have like, as we all know, like Nasdaq being one of the greatest listing out there, and people like are trading day in day out. So if like, what's your opinion when I say that someone's a trader and they are yet investing, but they're like making the most amount of money through trading? So would you call a trader an investor, or you would just call them as someone who's like trading money day in day out based on stock prices and index funds?
I don't really care about these terms because I think if you're trying to do something a bit different, you're not going to fit into clear categories anyways. And so, even structurally, like we do a lot of liquidity management because we've done a bit of structuring where we've taken out some debt. And so we need to make our debt interest payments. And so that means that we have to have some liquidity available for the short term. And on top of that, there's also operations, payrolls, etc. And so the unusual thing that I've done is that like got actually a lot of our investments are in liquid assets. So like part of it is actually run, I wouldn't say like a hedge fund because we're not as fast as hedge funds, but we have like a lot of our capital in index funds where we'll just sell on a monthly basis. But we basically run super, super lean. So there's not much in the bank account every month, but every month we'll basically just figure out what's the best thing for us to sell right now. Then we have another portion that's in private equity investments where we basically do through syndicates or secondaries investments into private equity funds. And then there's a smaller part of the portfolio, about 5 to 10% of each of these strategies is into direct investments into high risk companies that we just find quite interesting. And so the idea
Okay.
is with the fund life cycle, as we have especially as I do think that we'll be able to pay our loans back in about a 10-year period, right? So once we're able to pay those loans back, and as we become more certain on, the payback period of those loans, we'll be able to actually allocate more of our portfolio into these less liquid private equity and VC direct investments. But then, sorry, could you remind me of your original question? I forgot. I've lost track of it.
It is more about, I mean, I'd like to like tweak it as well to get deeper understanding since you've talked about venture capitals as well. So, right now, what do you think is a major problem for VCs? Is it VC scouting or is it more on the investment side or to get your money back after the investment has been done?
Yeah. So I think VC in general is a bit of a tricky one, and I typically have more trust in VCs who have been founders before, like GPs who have been founders before, because I think it just lends a completely different perspective on the founding journey. I think the VC industry has matured, and in previous years, the concept of VC is that it's something that someone could go into from private equity or from consulting when they wanted to be in like more frontier technologies. But I actually think that that kind of corporate experience is not only not that useful for mentoring and advising startups, but in many cases it can be detrimental because the way of doing things in a startup is very chaotic, it's ugly, it's unpredictable. I'd say the exception to that is when startups are like hitting scale up period or like becoming very, very much more established. But in especially for like pre-seed and seed VCs, I think the skill set there is just so unique because it is like you have to be so scrappy, you have to do things yourself, but you have to also find the best tools and shortcuts. You have to deal with such a wide variety of stakeholders, and a lot of it's basically around like founder personality and taking big founder bets. And I do think that that's something that's like a toolkit, like being able to see how someone will do as a founder is more art than science, and I think that's something that a lot of VCs will struggle with. Most VCs underperform the S&P 500, and when I say that, it's not a kick at the VCs, right? S&P 500s are for a reason. They're the 500 top companies in the world, and they
Of
are led by
course.
incredibly capable people, right? And but then
Yeah.
when you are a VC, you are managing other people's money. And so you do need to be, it's like that thing that I was talking about is flipped, right? So you need to be a money manager first and then think about purpose second. And so if you are a money manager and you are trying to optimize your LP's returns, often there's like a conflict of interest in the sense of like you might personally back something as an
Yeah.
angel investor, but you might not feel comfortable with the level of risk that that would imply for your LPs. So I think that kind of the maturity of the industry, as well as that kind of lack, I don't want to call it lack of accountability, but like there's like an incentive misalignment is a massive challenge. And the VC industry is struggling with gains at the moment. And I think another reason is that it's oversaturated because a lot of people came in saying like this is thinking this is the hot new thing, etc. But it is a really challenging market, even as a GP out there, because there are also many strong founders who have choice in whose capital to accept. So
Oh,
yeah.
yeah. Yeah, that actually is more of like, and I think those who are founders, they actually understand what is it to like take the VC money, and that brings like a different perspective into the entire ecosystem, not just someone who's like jumping from private equity or investment banking or let's say consulting into directly the space, but let's say like you've borne your own money or you've borne a found any VC's money, you exactly know what the entire process looks like. So I appreciate this thought process. If you know, like you going into the other direction instead of choosing one direction at first, which brings me to a very interesting understanding. You know, like we've talked so much about finance and like your interest and entire career built on so many pillars: sustainable finance and economics. I also came across the fact that you've been into diving and you were a professional diver. So, I mean, how did that hobby prosper amidst all the things that you've been doing, your travel, your business? So, how did you actually get into diving as a sport and actually a professional diver, not just like, hey, I dive for fun. No, you like got certificates and you won awards for it, and you're like certified. So, how did you get into it?
Yeah, I mean, to be honest, it's just when I was living in Dubai, Dubai wasn't really like my kind of city because I do like adventure sports. I like being in the outdoors. So I just started going, I bought a car and I just started going to the coast every weekend and diving. And so I got my scuba dive master certification there. Over the weekends, and the dive master itself, I had to get over a couple of week period in Jordan. I switched to free diving, but maybe just to go broadly into personal philosophy, there are many people who split their personal life from their professional life. And for me, I don't actually draw a distinction. So I don't draw a distinction between like hobbies and work, etc. I think time is the only scarce resource in this world. And so I basically try and maximize the utilization of my time hours. And so,
Oh,
yeah. And so I think that's, anything that I do, I kind of end up going into 110%. Like I've also applied this idea of experimentation to my personal life as well, in the sense of I had what I thought was a brilliant reality TV show idea that I was going to carry out with my friend who is a reality TV show star in Finland. And so
oh,
the experiment that we ran there is that we basically wrote a concept note out in Notion, and with these AI tools, it's kind of like all this prototyping stuff that you can do is like very quick now. So we did with ChatGPT and a couple of meetings between him and I, we basically did a concept note for a reality TV show. We took it to a couple of people in our networks who are directors and producers, and they basically said like, oh, I don't think this is a great idea because like, usually for TV shows, it has to be something that's been tried and tested in another market. Or
right,
if it's
right, right.
needs to be someone like really famous driving it, and no offense, but you guys aren't famous enough. And we're like, okay, that's fine. So we dropped it, but it was just a couple of hours of work, with the other opportunity being like trying to pitch something really flashy. So it's like, when I see a project, there's also an element of figuring out how to test it in the most resource efficient way, and then how much time to put into it. And I think when it comes to how much time to put into it is also a factor of like enjoyment, but also like how good am I at this thing. So I love freediving as well, and that's something that I only figured out in my late 20s, early 30s. And but then it's like that was something where I was able to see really fast progression. I was able to, it was really good for my mental health as well, because the whole exercise is so meditative, and I was just really good at it. So, I started my training in Malta. I went back to Dubai, and, the people that I was freediving with have been doing it for ages. And they were basically saying, well, we can see that you've just started, but like your technique is really good. So you do have a natural propensity for this. And so stuff like that, where it's like, okay, I enjoy doing it. I'm good at it, and it's not going to pay me money, but like it is a valuable use of my time because it makes me feel actualized.
Yeah, I love that. You know, it's. I mean, these are the areas in our life wherein we feel that we are making a holistic life. Like most people talk about work-life balance, and as you mentioned, it's like work is also part of your life. Diamond is also part of your life, and you treat all of it as a holistic experience and something that makes your life a whole. Which brings us to an interesting segment. It's called 90 seconds to teach me something. So right now, if I give you 90 seconds, what would you like to teach me?
Yeah, so I had to check back to what I sent you in the email, but it's about risk, and it's basically risk is not something to fear, but it's something to manage consciously. And I think that's especially relevant for more risk averse cultures, that are cultures that have failure of fear. because actually, when you link risk to reward and look at these ecosystems, say in Silicon Valley, basically figuring out how to do, I think the step should be figure out how to do the best and biggest thing that you want to do, and then figure out how to de-risk it along the way to get there.
Wow. I really appreciate that, it's more about understanding how calculated risks also work, is because so many times we underestimate or over evaluate something. And does this concept works like in day to day choices, or you're trying to link this more with the financial choices that you make on a day to day basis?
I think it applies to everything that I do. And I think another point, because you mentioned calculated risks as well, I think don't spend too much time trying to calculate the risk because you'll never be right. Like no one can read the future. I think just do the best you can with the tools that you have. And in the end, everything, pretty much everything you do can be broken down into a series of discrete decisions.
Wow, that's great. And this also brings us to, an interesting segment, and I'd like to thank you for your insight. I would definitely like do something crazy, and you'll be the first person I'm gonna email that, hey Linda, I tried something this, and this is the result. And I did not calculate it much just because I knew my assumption might be the worst assumption I could ever make in my life, but this is what I did. So I mean, be ready for an amazing email out there.
Thank you. Looking forward to it.
And to get to this segment, it's called Seven Questions to Fame. So I'll be having seven questions, and once you're ready, they will be in a rapid fire format.
Yep, let's do it.
Okay. So the first question goes like, what would be the three books right now that you would recommend if I had to outgrow the past self for myself?
Yeah. So cheating with the first one because I haven't actually read it, but everyone keeps telling me to read Die with Zero. And then the second one would just be my favorite book, which is The Memory Police, which is Japanese fiction. Third one would be Factfulness by Hans Rosling, which is a book rooted in development economics, but basically shows that the world is much better than we think it is.
Wow. I mean, I'm gonna buy all three of them on my list now as well. The next question would be, based on all the multicultural differences that you've had and the experiences, which country right now do you think is the best to start a business in?
Sorry, you cut off for a moment there. Would you mind repeating the question?
Which country, like since you've lived in different countries and built businesses in different parts of the world, which country right now do you think is the best country for anyone to start a business in?
Yeah, I hate to be the kind of person parroting on, but it's Silicon Valley. I think personally, like, I wouldn't move there because everything I have is in Europe, but it's the only thing that makes sense.
I mean, I appreciate the honesty in that area. And I think if you've lived in SF or like the Silicon Valley once, it's so hard to go back to the basics. Every part of the other world is going to feel slow, unideated.
Yeah, exactly, exactly.
And the next question would be, so if you had to work with a toddler with the finance basics, what would you recommend to that 5 year old kid that would help them advance into their financial game of life?
So I think at least when I was a kid, I was given a piggy bank and taught how to save in a piggy bank. But I would rather have some kind of investment platform and start with investments rather than savings because there's so much to learn. It's better to start early.
Oh, wow. I think for future generations coming in, prepare your kids.
Yeah, exactly.
And to get at the depth of it, what has been the one perspective that changed how you view life as a person?
Unconventional one, but I did a polar expedition training course in March this year in Norway with the idea that I'd like to eventually ski to both the North and South Poles, and obviously that requires a bit of training. And my instructor there was someone who I respect massively called Hannah McKeand, and she's set a bunch of Guinness World Records for skiing to the South Pole. She's done the ski herself 6 times. Each time takes 2 months. And so I love the course. I got so much out of it. And at the end, there was like a little celebration of completion where she made little speeches, thoughtfully prepared speeches to each member of the group. And when she looked at me, she basically said, "You can do anything you want to." And so that meant so much to me coming from her, who has done like these unbelievable things. And I just find that in society, there's so many self limiting beliefs. I think many of them are false. And so hearing from someone who's done pretty much everything that I'd love to do, that I could do anything, made me reshape from thinking, oh, I can't do this, I can't do that, to this more like visionary level of thought, which is what is it that I actually want to do? What is the biggest and best thing that I want to do? And then how do I get there? And that was very life changing in my perspectives.
Yeah, thank you so much for sharing this. That's very powerful, and I'm glad you got such a thoughtful feedback from someone you admire the most. And the one question would be definitely so if you actually had to relook things in your life, what is one key achievement that you're most proud of right now?
I think my first cycling expedition from South to North Madagascar. And I think the reason that one is because it's not the most longest or most impressive cycling expedition that I did, but it was the first time that I just put my mind to something that seemed very much out of my comfort zone and then did it. And then the achievement was not actually just like, being that at the end, but the achievement was basically showing up and committing every single day for 6 weeks to achieve a larger goal. And as simple as it sounds, it's just like, you look at these big achievements, but then you forget that the day to day is actually pretty mundane, pretty boring. But when you break it up into these chunks and you show up every day, you can do massive things.
Wow. And the last question, I'd like to tweak it a little bit. What is one financial advice that you would like to give to the 20-year-old Linda?
Just start doing stuff now. And this is really cool because as we've been doing our test financial modeling, we've noticed a big difference in people who start in their 20s versus people who start in their 30s. And that was actually counterintuitive to us, right? Because we were like, okay, let's focus mostly on 30-year-olds because they'll have more savings, more
Yeah, of course.
decision making power. But then because of that extra runway and the compounding interest that you get with an extra 10 years of investing life, I remember checking with my intern because I was like, this person is like not making a super high salary, but we're saying that in 2070, they're going to have £10 million. Like, can you check the maths again? And I kept saying, can you check the maths again? But because the test customer was starting early, they were just able to achieve so many more compounding gains on their investments.
Wow, that's so detailed. Like if you look back at it, I mean, absolutely. I really appreciate the advice that you've shared. Specifically, when you think that you're broke and you don't have money or you're making less as compared to someone who's in their 30s, maybe at a good position in that company. But I think even if you're like making a few $1,000 a month, you can actually like put that into saving and investment. And I think it's so much about the long term future and vision. If I look at finance and the conversation that we have had, and feel free to correct me if I'm wrong, I'm an understanding that it's more about, like the next 5 years, the next 10 years, my retirement, my kid, the company that I want to like invest in probably in the next 5 years or like the next 4 years. So do you also now, like since you've been doing this for like so many years now, decade and a half, and do you think of it like a long term game always, or sometimes you do take these short term plays at finance?
I think of it as a medium term. So, I mean, there's part of my portfolio that's super long term. And this is what I found interesting as well, because there's not really a word, because they have like swing trading, which is when you take advantage of swings. But actually, I don't pay myself a salary with Moola money. And often if I want to buy like purchase, something, so I do pay myself a salary from the investment company, but it's quite low. It's basically a bare minimum to fulfill immigration requirements. And because I do like to travel a lot and I will overspend that often, I will sell a bit of crypto because crypto is not taxed in Germany if you hold it for over a year. So then often the crypto that I hold, I will have held for like 2 to 3 year periods. And that's just kind of how I've optimized for my life because it's like, I don't want to be frugal. I do like to kind of spend extra money on nice things and I do have the means to do it. So I kind of was able to structure my own situation. And if it was another country or if like I was in a place where crypto was taxed, I might not be able to run it the same way. It might be something different that I'm selling in order to fund my extraordinary purchases. So I don't, maybe that's another thing as well. Like you don't have to do the things that are conventional wisdom. I think it's best to just like invent what works best for you.
I mean, if I look deep into it, it's so much full of depth, and it like you need to like revise and like go through so many areas because it is not a superficial analysis that you have shared. You know, like it's so much based on your life experiences and like again, it's a very layered experience that you have shared. So I'm so glad to like share this space with you and I would love to. I mean, it's always the hard part when we know that a conversation is something that we need to like be like, hey, it's cap in time, and like we have to part ways. But before we are at a point where we are parting ways, what is one thing that you'd like to say?
Oh, let's think. I think also just the importance of fast decision making and relying on your gut feel sometimes. So I think there's so many rules and frameworks, this and that. But honestly, something that's helped me the most is training my gut feel based on experiences that I've had and using that gut feel for decision making. And I think at least now that is backed up by science. So Daniel Kahneman, who won a Nobel Prize, one of his books is Thinking Fast and Slow, and the importance of being able to make fast decisions sometimes and having that intuition trained is something that I think is massively undervalued still.
Yeah, thank you so much. I'm so grateful to actually learn so much, and I would, like love for us, like if we hop onto a place and we do like these lives when we are understanding different aspects of finances. And I'm happy to share a link to the workshop and any future like activities or events that you're doing for a global audience. I think people would be so much interested to know more. And finance is a topic that's ever growing, and everyone needs to have a secure future. So thank you so much, Linda, for this conversation. I'm so grateful to have you today with us.
Thank you for having me. It's been a great conversation.